China had hoped for a speedy economic recovery after authorities relaxed strict zero-COVID measures and reopened its borders 6 months ago. But results have been dampened by weak external demand amid a gloomy economic outlook. How are manufacturers adapting to this new reality? Olivia Siong visits China's Hubei province, which was once the epicenter of the country's COVID-19 outbreak.
It's all hands on deck and full speed ahead for this vehicle manufacturer located in Siong, the second largest city in China's Hubei province. The company is hoping to make up for lost time after 2 years of dampened overseas sales.
主要是那个销售人员就出去不方便，因为出去回来都受到各种的限制。
Things have since changed after China relaxed its zero-COVID measures, scrapped travel restrictions, and reopened its borders about 6 months ago. Not only has the company seen more potential clients visiting from abroad, it also set up a branch in capital Beijing to handle the export of its products. The company expects its overseas orders to increase by up to 3 times this year compared to 2022.
前段时间，就襄阳市政府也组织了那个襄阳的企业代表团，到了俄罗斯，到了俄罗斯去拓展市场。另外的话，就我们那个董事长和那个总经理，他们也亲自出去带队，到整个东南亚这边去考察对接市场。
The upbeat outlook was echoed by other manufacturers CNA spoke to in the city.
市场比例的话，目前是以国内为主。 但是呢，我们这一届应该是说，特别是最近2年，海外业务增长的比较快，这主要是得益于中国的走出去的一些战略我们的企业跟着沾一些光。
These companies were lined up as part of a visit organized by Chinese authorities to the city, keen to show foreign media that the country is open for business after China saw its worst economic growth in decades last year.
Now, Chinese authorities have been going all out to give the country's economy a boost as it tries to put the COVID-19 pandemic behind it. And even as companies like this one are now heading overseas once again to try and grow their business, observers, however, say that there may be other challenges that lie ahead.
While China's exports have seen positive annual growth in March and April, economists have warned this does not paint the full picture. After all, the comparison is from a low base when Shanghai was in lockdown last year. According to online logistics platform Container Exchange, evidence of this is seen in a significant number of excess containers at China's ports. This also comes as companies have sought to diversify their supply chains away from China when there had been no end to China's zero-COVID policy in sight, also exacerbated by the country's trade tensions with the US.
Now I'm not only looking at the lowest price, but also at the highest reliability. And if I deal with an export country where I can't rely on politics to create a climate or an environment for reliability, but that politics that creates a climate of sort of severe restrictions of ongoing production, etc., then I'm more inclined to move to more reliable alternative.
Month-on-month export growth figures are also slowing down, and overall, ING Bank is forecasting no growth in exports for 2023. This amid weak demand for goods as the US and Europe battle high inflation and face recession risks.
They are in a slowdown, and this is not because the Chinese domestic economy hasn't picked up. It is almost the opposite. It is the external markets that is slowing, and that will have some impact on the domestic economy.
Authorities are also hoping to increase domestic spending, although observers say the recent contraction in imports shows this may not be happening as quickly as hoped for, this pointing to a bumpy road ahead in the country's post-pandemic recovery. Olivia Siong, CNA, Siang.